Hello everyone, welcome back to the channel. Before we start, I just want to say something about stress and how it affects our life. Because people encounter stress every day, whether it be stress in business, stress in student life, stress with your family. You'll encounter stress every day. But to make sure that your life keeps on going well and that the flow of life continues on, you need to learn how to deal with the stress. Because there's a flow in everything we do. Whether it's breathing, walking, eating, running, everything in your life has a flow. And stress disrupts that flow. This stress comes from two things: fear of the unknown and fear of expectations from others. So, to make sure you can deal with this stress, you need to make sure that you talk with your own self for 5 minutes every day. If you can at least do this, you'll be able to manage your stress. Because our life is very precious and you only have one chance to live it. So make sure you deal with your stress and live happily. So we'll be discussing on how to file taxes in the US if you're a Canadian student studying there on an F1 visa. So right now the tax season has already started in the US and the deadline without any extension for filing taxes is April 15th. And what's really good is that if you watch this video, then you'll learn how to file your taxes on your own, so you won't have to go to a taxpayer. You can do it all at home. So if you're a Canadian student that has an F1 visa and you're living in the US, then for the first 5 years you live in the US, you're exempt from substantial presence test. And that means you would file the 1040-non-resident tax form, and that's the form you'd file in. You wouldn't file the resident tax because for 5 years you're still considered a non-resident in the US. Now, how do you calculate your substantial presence? The way this happens is this starts from the 6th year that you're living in the US on an F1 visa. So once those 5 years of being a non-resident are up, then this is the way that they'll calculate if you file the resident tax or not. So it includes 31 days during the current year and 183 total days of the following year. So days in the present in the current year, 1/3 of the days present in the year before the current year, so the first year before current year, and 1/6 of the amount of days present in 2 years before the current year. And the total of that should be less than 183 to still be considered a non-resident. If it's greater than 183, then you have to file the resident tax. Alright, so now we're going to look at an example of a Canadian student living in the US as a non-resident. So here we see you have to pull up the form 1040-NR because that's the tax form that you'll be filling out if you're a non-resident. And so first you have to put in your first name, your last name, your address, your city, your identification number, which is also your social security number, and that's the basic information that you fill out. And make sure you fill out if it's an individual or a state. Now, if it's an alive person, then it's definitely individual, so make sure you fill that out. And once you've done that, check off the single non-resident area. Now, once you've done this basic information in here, you go to your W-2 slip that you received from your employer, and you look at all the information there. So here we can see that John Davidson, in the example, has a salary of $9,000, and his employer deducted $550 as a deduction. What's good about these Canadian citizens is that, Canadian students, living in the US, is that you don't have to pay any Social Security or Medicare, which is really good. If you do lose that money for some reason, or if your employer deducts it, then there is a way to get it back from the IRS, which we'll explore in a later episode. Now you go back to the form here, and you go down here. You do not have to report the $9,000 income in line 8 because there is a tax treaty between the US and Canada which states that an income that is less than $10,000 does not have to be reported by a Canadian student. So you go to line 22 here. It says total income exempt by a treaty from page 5. So here we put in the 9,000 that we see here, and we put it into line 22. Then we keep scrolling down further and further. We don't have to consider any of this until we get to line 62. Here it shows federal income tax withheld from. Now here we see that in our W-2 slip, $550 of our income was withheld by our employer. So we put that amount into line 62A. Once we've done that, we go down here to line 71 and we total up all of these boxes, which gives us 550. Once we have that amount, we can also put that same amount into line 72 because this amount is more than line 61 here. So here he even states that if line 71 is more than line 61, subtract line 61 from line 71. And this is the amount you overpaid, which means this will turn into a refund, which you put into line 73A. Once you're done that, you can keep scrolling down further and further. We can ignore these pages as well until we get to other information. So here it says, of what country or countries were you a citizen or national during the tax year? We put Canada here, Canada here. We put no for all of these because we haven't applied for a green card. And once we've done that, you have to make sure if you didn't have a visa, then you have to show what type of visa we've had. And we put F1 there because we're a Canadian student that's living in the US currently. Once we've done that, we go down here and it says give number of days you were present in the United States during all of these years. So for this example, we're just going to say he was present in 2017 for 4 months and he was present for all of 2018 and 2019. Did you file U.S. income tax for any prior? We're going to say yes. He filed the same thing for last year. It was 1040NR for 2018. We say no for all of these because we haven't made more than $250,000. And then we go to this part, which we have to state the tax treaty that we applied onto our income tax. So here we say the country is Canada, and the tax treaty article is number 15, but we have to state it as a Roman numeral, so we say XV here. Then it asks number of months claimed in prior tax years. So this person filed this 1040NR tax for 2017 and 2018. Even though he was only in 2017 for 4 months, the US still considers that as one whole calendar year. So we have to say he used this tax treaty for all of 2017 and 2018, which is a total of 24 months. And then finally, it asks you amount of exempt income in current tax year, which is $9,000, which we filled out already at the top. Then it says, were you subject to tax in a foreign country? Yes, that's Canada, and this we say no. Once you're done all of that, you just want to scroll up here and put your signature, the date, your occupation, and fill out that information in this box. And once you're done that, then you're ready to mail. Now to mail, you have to make sure you mail both this form and the W-2 slip. And if you want to know where to mail, you can go to the IRS website and it gives a list of the major tax centers in the US and where you have to mail all your stuff to. So here you can see that this is a very easy system to follow and you can just do this at home. You don't have to go to any taxpayer and it's very easy to do at home. So now we're going to look at an example of a Canadian student living in the US who earns over $10,000. So the information that is still the same from all the last time, the name, the last name, the social insurance number, address, city, individual, single non-resident, and then we go to the W-2. So the W-2 is still very similar, but the income is over $10,000 now. So here we see the income is $15,000 and $1,500 were deducted by his employer. Now we go back to the form, and this is where it deviates from the other example. Now we do have to report $15,000 as our income in line 8 because our income is over $10,000 now. And what's really weird about the US tax system is that even if you earn over $1 over the limited tax, over $10,000, sorry, then every single bit of your money is taxable, which means we cannot put any amount in line 22 anymore because the treaty does not apply because we've earned $15,000. So our combined income is now going to be $15,000, which we put in line 23. Now you scroll down a bit more and come into line 35, and our adjusted gross income is still $15,000. None of these points apply to us. We scroll down more and we get to line 41, which is taxable income. All of our money is now taxable. The treaty does not apply anymore. And then we have to calculate the tax. So the way we calculate this is we go to the IRS website and see the tax brackets for all the different types of incomes. If it's less than $9,700, then it will be taxed 10% of that. And if it's over $9,700, then it will be 12%. So we combine those two amounts and we calculate the taxes for under $9,700 and over $9,700, and we get to a total of 16 $1,606. So $1,606 is the tax we have to pay. Then we go down more, and then none of these points apply, and we get total tax, which is $1,606. We go down again, and we see federal income tax withheld from Form W-2. So here we see that our employer already took out $1,500 from us, so we have to put that in line 62A. Now we add all of these lines, we still get 1,500 here. Now again, we come here, and the amount we owe is calculated by subtracting 1,500 from 1,606, which means we owe $106, and we put that in line 75. So $106 is what tax we have to pay to the government. Now we keep scrolling down more and more. We can ignore these 2 pages, and we come here. So it's still the same as last time for the top part, which we put Canada, Canada, no for all of that, and we put how many days we stayed in the US, and we have to still put the F1 visa as our visa type when we live in the US, and 1040 NR 2018 for last year, no for all of these. But this time what's different is that we don't put anything here because none of the tax treaties were utilized, but we still do put that we were subject to tax in a foreign country, which is Canada, and we put no here. Now once you're done that, then you could go back up here, sign it, put the date, and do the same thing as the last example and mail it to the IRS.